Good morning and welcome to the final episode of California in Focus. This is California reporter for the Center Square, Kenneth Schrupp, here with Madeline Shannon on a story about what's called the FAIR Plan in California and possible expansion to the program. Tell us more about the FAIR Plan, what it means, and why it was created.
Right. So, Kenneth, the Assembly Insurance Committee this week in the California legislature decided that they wanted to talk about possibly expanding the California FAIR Plan because it seems that more and more homeowners in California are only able to get homeowners insurance through the California FAIR Plan because they can't get conventional homeowners insurance policies through traditional private insurance companies. A number of them, including State Farm and Allstate, have outright canceled homeowners insurance policies for homes in California. They're not renewing existing policies and pulling out of the state altogether, at least when it comes to homeowners insurance. And
so why are these companies leaving the state?
Because it's just too expensive to do business in California. They have to pay out more and more in claims for homeowners every year. And with the increased wildfire risk in places like Southern California and in forest-heavy Northern California, north of Sacramento, there's just too many claims coming in for a lot of these private insurance companies that have a lot of business in homeowners insurance in particular. So a lot of them are just pulling out of California completely, or they're just not writing new business in homeowners insurance, and they're not renewing existing policies.
Yeah, I remember reading State Farm's letter continue to request rate increases. The issue seems to be that because the state's insurance commissioner has to approve rates, and the state insurance commissioner is popularly elected, that there have not been increases in rates that have kept up with the dramatic increase in the cost of actually paying out for these policies, which also has a lot to do with the state's very poor forest management, which has led to worse and worse wildfires because it's something the state has not prioritized. People talk often about this wildlife-urban interface and more people living where the risk of fire is higher. But from what I'm seeing in the governor's continued budget proposals and just general state funding, we put a lot of money into stopping fires once they start, but not a lot of money into stopping fires before they become a problem.
Right. And the Eaton and Pacific Palisades wildfires in January of last year in particular caused between $28 billion and $53.8 billion in property damage. Those are numbers according to a report issued by the Los Angeles County Economic Development Corporation and the Southern California Leadership Council. And a lot of folks, as we read and as we saw last year, lost their homes. And that's part of the problem.
Yeah, when I'm looking through some of these responses here, what is really meant by, quote unquote, expanding the FAIR Plan?
Well, I think that lawmakers really want to see the California FAIR Plan have homeowners insurance policies for more homeowners in California and be able to have full homeowners insurance policies. A lot of people who have policies with the California FAIR Plan aren't getting as much money in claims, or they're not able to get as much coverage from property insurance through the California FAIR Plan as they would through a private insurer, a private insurance company. And lawmakers want to see that change.
But the FAIR Plan was created for homeowners in areas where the fires and forest management have gotten so bad that insurers just don't want to cover them. So it seems like the growth of the FAIR Plan is just a response to a lot of poor policy choices by the state. So why does the state want to grow this plan, which of course doesn't even have the same coverage limits as private plans? You're only limited in coverage to below a certain amount. And if you live in an expensive state like California, you're very likely going to be above the coverage limit in terms of your property value. So you're only covering a part of what your house is worth. Is that something that people have talked about at all?
Yes. In fact, I think a lot of people who can only get homeowners insurance through the California FAIR Plan are really just getting what you would get from a renter's insurance policy. It's really just contents only that you're getting insured, or that you can get insured through the California FAIR Plan. And lawmakers really want to see that change and have homeowners have full coverage for their homes from the California Fair Plan, because so many homeowners in California now just can't get proper homeowners insurance policies. And with so many people living in wildfire zones or other zones that are predisposed to natural disasters, lawmakers just don't want to see homeowners lose all of their investment in their homes and potentially leave the state.
I see the governor often talk about how some other states like Florida have more expensive insurance than California, and that's a knock on Florida. But it seems like having a lot of this high insurance cost in a place like Florida, where hurricanes are a natural disaster that you can't control, compared to California's rates seemingly being lower than they should be for the level of risk that there is for what does seem to be a issue that people can control, does seem to be a little out of whack with reality.
And a lot of people who gave public testimony during the Assembly Insurance Committee meeting this week said as much. A lot of people who work in insurance or who work for insurance lobbying firms in particular don't want to see rates go up. They don't want homeowners to leave the state, and they want people to be able to get homeowners insurance. But the cost of homeowners insurance is just so unrealistic for so many right now.
But it's unrealistic compared to what the actual cost of the risk is, right? Like the rates are actually still much lower than they would be if they were set according to what the actual risk was, though.
And that would place homeowners insurance out of reach for many homeowners who just couldn't afford it.
And wouldn't that also most likely result in policy changes to reduce that accurately priced risk?
Possibly. And that might also result in policy changes to how the state manages wildfire risk in forestry, because that is a big part of the problem, as we saw with the Eaton and Pacific Palisades wildfires a year ago. But that does remain to be seen here.
Thanks, Shannon, for your time today. You can keep up with this story and more at thecentersquare.com.